Back to the Land Bulletin series. I'm Haley Mirr. I'm the Director of Operations here at Mirr Ranch Group. Welcome to the series where every other week we discuss the ranch and sporting property market, buying and selling advice, and the latest best stewardship practices, as well as topics currently impacting landowners. Mirr Ranch Group, for those of you who are just joining, is a full-service ranch real estate brokerage and consulting company focusing on legacy ranches, sporting and conservation properties around the West. Today, we're going to be talking about the state of the ranch market. How has the market changed since the beginning of the year? What is the outlook for the rest of 2022? And while we're doing that, we're going to be looking at the recently published USDA Annual Land Values Report and focusing on two very important markets in the Intermountain West, Colorado and Montana. Thank you to everyone who has submitted questions. We'll try to get to them on this broadcast. But if we don't, we will be sure to get to those questions after this. Helping me out today is the founder of Mirr Ranch Group, Ken Mirr.
Hello.
Welcome, Ken.
Yes.
How are we feeling today?
Wonderful. We just spent the weekend together up in Saratoga, Wyoming, enjoying festivities with the Wyoming Stock Growers Agricultural Land Trust for their big annual event. And it was really pretty cool, kind of recognizing all the wonderful stewardship and conservation going on in ranches throughout Wyoming. It was a lovely time. So
it was great. We met some really cool ranchers. It's really nice to get your boots on the ground and to get to know the people that are stewards of the land. So that was fun. And Jared was up there with us too. It was good.
Yeah, because you talk about all these things and values and things, but in the end, what it means to the landowners, and heck, a couple weekends before that, we were up in the Buena Vista area for the Colorado Cattlemen's Agriculture Land Trust meeting as well, and it was amazing to be like up in Buena Vista and seeing the changes that are going on up there. Talking about values and my only complaint was I had to wait 30 minutes to get a cup of coffee in Buena Vista, which never happened 10 years ago.
They need a couple more coffee spots, I will say.
Maybe.
Awesome. Well, thank you as always for joining today. And I think our viewers, one of the biggest things that ranch owners, buyers are interested in is how the market is doing. And one of the biggest reports that actually kind of allude to what values are is the USDA annual report. And before we get into what the report is and what they measure, how does this report relate to our industry for those of you who are watching?
Well, this is kind of an overall countrywide evaluation. They break it down into regions. And it's kind of an agricultural, so they look at cropland, pasture land, farmland values. And I think what they do help you with is just ascertain, where the overall market is going, understanding that in what we do and what we tend to focus on is a segment of that, a smaller subset of these things. And we'll talk about it in detail a little more, but it just reflects everything is up. And now you just got to kind of break out that and see what are those particular areas of the report that are applicable to what we do and how to break that out, because certainly the Intermountain West is a way different commodity, way different landscape than where I'm from, originally in Indiana and the Farm Belt regions, where production and corn and all those things are it's just a different land value too, because of the prices that you and the income you earn off the land.
Yeah, because we'll look at numbers in a little bit here, but the increase overall, as a country, the increase of cropland, farmland, and pasture land
it's just across the board.
Insane. Yeah.
And quite telling too, and I've said this to a lot of people, just look at since 2008, we've been on an upward trajectory for quite a bit of time. And, in these past couple years, it just, it got to be a little so crazy. I don't think you need to know what you were doing. No offense to the brokerage community, but you didn't need to know how to dot an I or cross a T to necessarily sell a property in this market.
Yeah.
And as we'll talk about, I think we're getting back to more of a reality of where hard work and knowledge and those things do matter. And
Mhm.
so I think that's just we're returning to maybe more of normal markets is kind of the overall feeling that we're getting
The
to slowly.
thesis,
Yeah.
the thesis of the market.
Yeah, I think
Um,
so. Right.
yeah. And so, yeah, so like kind of what you were saying, what we do is definitely a part of this USDA report, but they
Hmm.
measure things. They measure three values. They measure farmland,
Hmm.
cropland, and pasture land. And for those of you who are tuning in, the difference between those farmland, when the USDA looks at that, they're looking at the average value of all the land and building used for agricultural production, including dwellings.
Hmm.
So that's kind of the farmland, and that has a lot to do with our industry. They measure cropland, the value of land used to grow field crops, vegetables, or land harvested for hay. And like Ken was alluding to earlier, a lot of the cropland we deal with is a bit smaller than,
Yeah.
let's say, the Midwest. So they're looking
More.
at everything between that to
Yeah.
places in Iowa that.
So many things that we deal with. You got the eastern plains of Colorado, Montana, places where crop production and what we typically think of crops from, you know, corn, soybean, beets, things of that nature, versus the higher upland kind of west slope of Colorado, other areas with higher elevations. You're really looking at hay production, and hay production is very important, but it's definitely a smaller segment of the overall ag production.
Mhm.
And we can provide those numbers if people are interested. But when so many of the ranches we sell, there will be some irrigation, right?
Right.
But most of the irrigation is related to hay production. Some of these places you may only get one cutting based on elevation, so you might get a yield of 1.5 tons per acre. Although when we get out to places that are lower elevation in Utah, you get 6 tons an acre. So that income then starts to become more important. But in the overall scheme of things, generally speaking, our irrigation is a subset of the overall ranch, which includes
Mhm.
pasture land, which includes recreational land, which this USDA doesn't really touch,
Right.
values of recreational land for hunting or fishing, and a lot of it doesn't really even pretend to talk about impact of being proximity to resort areas and things of that nature. So,
Right. So this is an additive. So it's like we look at these numbers, we look at our appraisers,
mhm.
we look at comps. I mean, but this is kind of the base level of kind of what things are trading at
Well, and
as
it
a
matters
market.
too, because this is a guideline for the federal government and what they do for uh, allocating funds for the farm bill and all these other
Mhm.
things. It's a very important statistical model of what a lot of the funding mechanisms that are available to farmers and ranchers in the United States, and this is what they utilize. So it's important. I mean, it
Right.
drives a lot of considerations in Washington D.C. and other things. So yes, we do need to look at it and just take it with a bit of grain of salt, especially if you are looking at you know farms or ranches in the Intermountain West, what we focus
Mhm.
on.
And just the third one before we go into the
Mhm.
data is pasture
Mhm.
land, and that's huge for Colorado. I mean,
Yeah,
a
Colorado,
lot of the people.
Montana,
Yeah.
Wyoming, New Mexico. Pasture land is probably the bigger segment of what we do, and part of the Dakotas too, and some of
Mhm.
those areas. And so we do look at those numbers quite a bit and say, and it's fun to I think to look at these things and compare between the states too. You
Oh
start
yeah.
looking at the numbers, and they'll give you a per acre value, basis.
And beyond that, so we'll just kind of go, and before we go into how these numbers affect kind of the markets that we're going to focus on in Colorado and Montana specifically,
Right.
commodities, as everyone knows, the price for commodities has gone up, and a lot of that has attributed to these strong numbers of growth with land value. So in the U.S. overall, farm real estate values went up 12.5%, which is higher than it's ever been from a year-to-year basis.
Right.
And again,
Right.
we will provide the USDA report to those listening
Yeah.
so that
Please
you can
let us
see
know.
these
Right.
numbers. Yeah.
Mhm.
Cropland value up 14%, and pasture value up 11.5%. So across the board, I mean, to be over 10% for all of these values is unheard of. And then just looking regionally for the mountain region, which is where we primarily work, the farm real estate still, although it's, less than the country overall, still up 8%, cropland up 10.5%, and pasture value up 9%.
Right.
You've been doing this for a while. I won't give, away your age, but have you ever seen values? Have you ever seen an increase like this across the board to such an
No,
extent year to year?
no, and for some of these things, they attribute a lot of it, different things. I mean, there's so much more money in the market, somewhat some people call free money, but there is, the markets are strong, but at the same time, when you have things like war in Ukraine and some of these issues that impact fertilizer, and you have drought, and you have all these combination of things that work towards reducing production. Therefore, and with demand increasing, you just don't have the supply, and so the numbers
Right.
just naturally are going to go up.
Mhm.
You are the environmental econ major, as I recall, so you understand economics. But yeah, you look at across the board. I think, and I was just looking at the pasture values. Average pasture land in Montana 775 per acre, 940 in Colorado. And 480 in New Mexico. And part of that has to do, if you look at it, just the level, the percentages go up based on availability, price. Availability, drought. What demand is, and it kind of makes sense that it tends to dip from the northern states, which are the highest, all the way down to New Mexico because of drought and other considerations too. So
Right.
as I look at that kind of makes sense to me overall.
Mhm. And from a buyer and seller's perspective, I mean, seeing these numbers, on a
Mhm.
seller side, you see these and you see an increase in your overall equity and, price per acre increasing. And then on
Right.
a buyer side, it's a little bit of a higher barrier of entry for those who are looking,
Sure.
at
Yeah.
these types of properties. But
The prices go up. It does definitely create a barrier. Um, and at the same time, though, those who own the ranches, it increases your equity over time.
right.
Just like, here we are I live in Denver, for instance, and saw the value of our home shoot up. So, there's a bit of a catch-22 there, as to what that means. Um, you know, and quite frankly, so much of what we do is there's a kind of different market too within the farm and ranch market. And we do quite a bit of work with ultra high net worth investors. And, there's a normal ranch, and then there's kind of a luxury ranch.
Mhm.
There are segments within that. And we tend to do more with more of the ultra high net worth investor from that standpoint, because we're just not including just grazing land. Usually it's, there's a lot of more unique uh, amenities and attributes to the ranches we deal with. So, I don't want to call it a luxury necessarily branded ranch kind of product that we do, but that's quite a bit what we focus on.
Mhm.
So, the barrier entry is less of an issue in the clientele that we operate in.
Yeah. Overall. And I mean, and that
Yeah.
luxury can even just be the fact that you have water on your property. That
Yeah.
that
Yeah.
quote unquote is a luxury,
A
especially in
fishery, really good
yeah.
hunting. I mean, it goes on and on. View sheds,
Yeah.
uh, adjacency to wilderness areas, all those things, national parks, et cetera. All those things add to
Yeah.
that.
And that's a great segue into kind of the markets that we're going to focus on today,
Mhm.
and how they were this past summer. We're focusing on the Intermountain West because that's where we do business, and we're
Right.
looking at two of the largest performing markets in the Intermountain West, Colorado and Montana. And you're the one that kind of wanted to go over these. So why did you want to look at these two states in particular?
Well, I think they are kind of two of his highest performing states, and,
Mhm.
and part of it, uh, Colorado's kind of easy. It's probably uh, it's a large state. It's probably the eighth largest, I think, or something like that. 21st most populous. But, we have, well over 5 million people that live in the state of Colorado. And then
Right.
and on the other side, you look at, I think Montana's like the third least populated state. It's much bigger. It's about, I don't know,
Yeah.
I can't remember the size differential between the two.
I think it's like one and
I
a
think,
half times bigger than
yeah,
Colorado,
yeah.
acreage wise.
So, but we're watching a complete. There's always been appeal to Montana because of just the broad open valley spaces, et cetera.
Mhm.
And certainly that's changing with the growth happening up in Bozeman, Missoula. You got some of these university towns, and Bozeman itself is, it'll be the next Salt Lake City at some, people are saying at some point. So, it's just seeing, especially, and that's also on the west side of the state. So it's seeing a great demand.
Mhm.
And I think that's fueling its growth versus, places like Wyoming. I mean, it's 10th largest state, but it's probably the least populated state by density in the United States.
Mhm.
So when we look at sales up there, we have a few small markets, certainly uh, the the
Jackson.
Jackson, yeah,
Yeah.
Jackson, Sheridan, some of the Casper, and like we were up in Saratoga, very much smaller market, of course. But so they have a fewer markets, but very, very unique. But
Mhm.
it doesn't have the same than that in New Mexico or even Utah or Idaho. They don't have the same just turnover as they do in
Right.
Wyoming or Colorado and Montana. That's hence why I think looking at those states is somewhat indicative,
Of the
and if
market
people want
overall.
more information as to Wyoming and New Mexico, Utah or Idaho, we're happy to provide those figures. But it's just a good segue into showing how these two leading markets and where they're going.
Yeah. And I mean, one of the biggest draws I know for Colorado is I think I read somewhere it has the most resort towns in any other state in this region, at least. So, I mean, that's a huge draw for people just looking. But it's
Mhm.
also indicative of a lot of the values that are happening. Whereas Montana, bigger acreage, bigger swaths of land, more sales happening compared to a lot of intermountain states. Um, but a lot of that is influenced by like land values and, versus the resort
Yeah, but just look at
values that
Colorado.
Colorado has.
Our
Yeah.
universities are in the Front Range for the most part.
Mhm.
CSU, CU, and all the some of the extensions and stuff are in the Front Range, so they're in a greater metro area. And you go up in Montana, I mean, and their largest city is, peanuts next to what Colorado's larger cities are, right? I mean,
Right.
and so it's just a different allocation of where people reside. But the university towns, for instance, in Montana, are just, they're growing by leaps and bounds. So you tend to look at it from that standpoint. Where are those? What are the influences of that marketplace? And clearly, Bozeman and Missoula, and you got places like Livingston and Billings and Helena and all these other do influence it, but it's just a different influence where you think of Colorado, you think of resort towns like Aspen, Telluride, Crested Butte, Steamboat Vale, list goes on. There's just so many of those that are, smaller as far as scale, but they do provide a great influence, especially given that they're in the mountain areas where there's less private land, more public land, and that drives supply demand too in those markets. Really does impact our market here.
And I guess so that kind of leads into, let's dive into the numbers and the actual market in Colorado and
Hmm.
how the ranch real estate market has done this summer compared to last year. I mean, as we were saying, Colorado and land values and the majority of the ranches we deal with are impacted by the resort markets. So, one of the things we're going to look at today, and again, this is something we'll provide after this, but Land Title Guarantee provided a couple reports for us, just
Right.
looking at the overall markets in a couple of our resort counties.
Yeah.
Um,
Did Land Title Guarantee sponsor this segment, by the way?
they should.
Right.
I'll be
Our,
calling Eric after this.
yeah. Well, we know, I know the founding family over there, and they do an incredible job. And
They do.
like other places, you can't operate in every segment of every market, but they tend to do a really good job from a statewide standpoint. Great service, et cetera.
Mhm.
Plug intended. and we appreciate it, and they do.
They do.
And all those kind of big markets, resort markets, they're there, and unfortunately, we don't have an overall state kind of group that collects all the data for all the kind of branches at this point. We're working on that, and
Right.
I know we've been even hiring people to do our own data collection and things like that. But it at least gives you a sense of where these things are going and what's happening.
Mhm. And we have these, what's great about what we do and our reach in our different counties,
Hmm.
a lot of local brokers might have access to, the quote unquote local MLS, but
Hmm.
it's so much more than that. There's so many other values and things impacting, and you have to look at the entire state. You can't just be relying on these smaller reports, that an MLS can provide. So we're very grateful. Again, plug to Land Title Guarantee for providing this.
Yeah.
But
And thank you for
overall,
the appraisers, right? To the appraisers that
oh
work
yeah,
with us. Colorado, for instance, is a disclosure state, but so many of the other states, Montana included, are non-disclosure states. And what that means is they don't necessarily you don't have to disclose the sale price of the ranch or farmland when you sell it, where you do in Colorado. So it's a lot easier for us to obtain, the values just by going on the various county assessor websites. And this is getting into some details, but in some of these other states, you don't have that opportunity. So you look for professional groups, and I think Montana too, Montana Land Source. We get some of that information from them, and we pay to be a participant in that. So just collecting the data can be difficult in some of these markets.
yeah.
So good.
And
I
that's
guess we
why,
go into Colorado, right? Is that what you want to say next?
yeah,
Yeah.
that's all right. I just love to hear you,
I
go on your
babble.
way.
Yeah. You're always
Um,
worried about if I have enough to say. I have plenty to say.
you have plenty to say. I've
Yeah.
never worried about that.
Okay.
But overall,
Mhm.
so there were a couple counties this summer, July in particular, where the gross sales volume was up. We had Eagle County was up, Grand County was up. And for those, Eagle County is kind of where Vail is located. Grand County, we've got Winter Park, we've got the Colorado River is right there. We have
Rocky Mountain National Park and all that,
yeah,
right?
so always going to be a higher value there. And then Pitkin County, which is kind of Aspen. So
Mhm.
for those of you, so those were all up in July.
And these were
Whereas
up. Are these month over sales then
yeah,
for the
so this
month?
is
Yeah.
July 2022 versus 2021.
Thank you.
Yep. And then there was a decline for some counties that we didn't expect to see. So Garfield County was down, Summit County was down, San Miguel was down, and Route County was down.
So
And some of
Summit,
this is
yeah,
what
Summits
was that?
are kind of a Breckenridge Keystone kind of market. San Miguel, Telluride, and Route Steamboat. Well, but things have been so high and at a
Right.
furious rate for so long. And I think that these are decline in sales numbers, figures, overall sales numbers. Is that
Mhm. Yep.
and it makes some sense. I mean, I think if you look at Pitkin, which is Aspen, there were many years after the crash in '08 when things just didn't pick up quickly in Aspen. But it's on fire, just like Jackson, and we can talk about that later. Well,
Mhm.
those are their own universe. I mean,
Oh,
they
yeah.
are.
It's an
I mean,
exception to the
that's
rule.
the ultra high net worth markets. They're very unique, and even a 4% or 3.5% increase in Pitkin can mean a lot, just
Right.
because of the sales. I
Compared to, like,
mean,
2020, 2021, I mean,
I
it's
don't even
just been
we should look at the average sale price of a home in Aspen. I forget what it is. I don't know if it's over 4 million or 5 million, but these numbers are absurd. And so you throw land on top of that and you get to some very large numbers. And we have a wonderful working relationship with Douglas Elliman up there, and we do some work with those guys quite a bit.
mhm.
And I think the same with Vail, in Grand County. I just think in some of these areas, I don't know why they went down necessarily, but I think it probably is the market is petering out in some of those markets, maybe a little more conditioned on second home buyers and financing. And so
Right.
I think things are
Interest
dipping
rates going
because
up and
inflation, not inflation, but interest rates are high, and those are affecting some of those buyers in some of those markets.
yeah.
And I think that's where you're seeing that. And I think the price is just, somebody said no mas. I can't, I
Right.
can't support this anymore, and the numbers drop, right?
Right.
And I think you're seeing that overall in some of the resort markets. Again, a few of those are maybe not subject to that long
But more
term.
impacted than ranches, I would say.
Yeah, yeah, yeah. Look at 90+% of our ranch deals are cash buyers,
Right.
and that's even on $30 million transactions. So it's really hard to say, how you're impacted, and how mortgage rates affect our market. And I think it's the impact overall on the overall economy that is making our general impact. And we could talk about that in conclusion. But I just think Colorado and some of these resorts are saying, okay, we've gotten to, we've strung this out pretty good. And
Right. It's
we've,
just it's normalizing. It's not like price per acre, price per square foot is still high.
Mhm,
Just overall that remains high and has actually gone up this summer.
mhm.
It's just inventory is low. There's less buyers than there were before. It's a little less stressful. Like I keep telling buyers, this is a really good time if you can to enter the market because
Right.
it's not as competitive. So it's just a normalization. It's not decreasing to a point where as a seller you shouldn't want to sell. It's just
Mhm.
normalizing. And I think a lot of that has to do with all the things that we've been talking about.
I think so. And I think data matters here. And I think, the whole idea of doing this and sharing USDA and some of these things are getting at least the buyers and the sellers a little more knowledge of, okay, where we're at. How do you want to
Right.
price things? For sellers, it's not putting a number on a dartboard and
No,
hoping you're going to get it. You got to
it's
come back to
changed.
reality. And for buyers, I think it's a little more comfort level of saying, okay, things have definitely steamed out here. Still wonderful opportunities. The thing that's just controlling all of this is inventory, and inventory is low.
Right.
But that's natural because of that feeding frenzy that occurred in the past. It's not like our market's huge anyways. I mean, ranches, I mean, if I growing up in Indiana, I can't imagine owning a ranch, right? I mean, so um, that market is slow. There's a lot more competition in that market. So inventories are naturally going to be lower
Right. And
just because of the supply.
as
Mhm.
a broker, I mean, the past couple years have been crazy. Values, brokers were able, like you said, to just put a value on a board and see where it landed. But
Mhm.
now, because of this normalization and this cooling down, you can't make as many mistakes. The market is not as forgiving. So knowing which brokers to
Yeah.
work with and,
Yeah.
you know,
That's a good point. I mean, it
yeah,
is not as forgiving.
we're seeing
And
price reductions all over the place right now.
totally right. Every
Right.
email you come across, you see that, and even doing new listings, I'm just having to educate, sellers that have been clients for a long time, and we're fighting, but nicely, he's just saying, look, I think, if you want to sell it, then you need to price it, within these bounds, because otherwise, you get back to that old position where people will sit on, our average listing period is about 18 months. Now you could be 2 years or 3 years, and you don't want to go back to that,
Right. The dark days.
especially with especially with the lower inventory.
Oh,
You
yeah.
should still be
You
able to
don't wanna
sell
be
it.
stagnant. Yeah,
Yeah, yeah.
it's huge. Well, I think, again, we'll send some of these reports about the resort communities in Colorado, but moving on to Montana, which we
Right,
have another report that we will share with everyone.
right.
But we're seeing a little bit it's kinda similar to Colorado in a lot of ways,
Mhm.
but there's a little bit of differences that are happening.
Yeah, right,
Um
right. The inventory is down, like
Right.
in
New
Colorado,
listings are
but
down,
yeah.
property sales are down. But as things are kind of starting to stay on the market longer in Colorado,
Mhm.
the days on the market for properties in Montana is actually down.
Right.
Things are still, I think that's kind of indicative that maybe there's more buyers looking on Montana, you know,
Yeah.
that
Bigger
the
big
resort,
landscape, right,
right.
too. We talk about
Mhm.
that. I mean, the size of, it used to be you could find 10,000 acres in Colorado. Well, that's harder to come by unless you're some southeast Colorado, where you can still find good, large, intact ranches up there. I think Daniel's going up next week with one of our buyers we've been looking at for a long time from Texas. And part of it is, hey, we should look up here because there's still big pieces now that you need to get up there and take a look. I mean,
Mhm. And you need
and
a pilot like Daniel because it's hard to
yeah,
get
yeah.
from one showing to
Well,
the next.
but some things like do turn over quickly. When we were representing the buyer of that property in Jackson Hole, Jeff's been looking like for a few years at least for that buyer. Saw the listing come up while he was like in Casper, coming out
Right.
of a ranch. Called the guy and they flew up the next day and they put it under contract, within 48 hours. So, those are still things when you have to recognize that there's opportunities like that. But well, Montana it's a different landscape. And, I think you can go over some of the stats and we can kind of do a summation of what we think the difference is. But tell me a
Yeah.
little bit more about the report. What did you see?
So this report, again, it's more of a land-based view versus the resort influence that we were talking about in Colorado. But today,
Mhm.
compared to 2021, the properties for sale has gone down by 37%. New
Jeez.
listings are down by 100%.
Wow. Yeah.
Average price per acre, like in Colorado, is up 14%. And then the
Mhm.
days on the market is down. So less inventory, but there's still a lot of interest. Prices remain high, and things are still getting caught up and picked up by people quicker than in Colorado.
Yeah.
Uh, and
Year to
that's just
date.
that. What's
Yeah.
that? Oh, yeah. Year to date compared to 2021, number of sales are down, number of expirations are also down, which is another
Well, sales
indication.
down 50% over last year, though.
Right.
So part of it's inventory
Part
being
of it's
down.
inventory.
Yeah.
Part of it's maybe, price per acre is a little different
Mhm.
up there because as I say that, the next bullet is price per acre is actually down.
Mhm.
So, again, that's year to date. So I think things again are normalizing up there, but there's just different types of land up there.
I
There's
think it's
bigger
different
swaths.
types of land, and
Yeah,
that's your point.
right.
I think they're seeing some of the same influences as the Colorado market clearly, um, but they're just there's a different scale sometimes of finding a larger property up there that you may have,
Mhm.
but it is a bigger state, and it's not as populated, so you're
Right.
gonna have that versus a Colorado where you just have a little greater density, and
And less private land in Colorado.
yeah, yeah.
You know,
So
Montana,
yeah, we
Montana's
should
there's
look
a
at. I
higher
think I have
chance.
to look at those figures too. I should know that being a public lands attorney, but
That's
some
all
of that
right.
some
I'll
of that
let it
escapes my
slide this
brain.
time.
Yeah.
But yeah, I mean, just overall, I think Montana, as is Colorado, prices remain high for sellers. But I think there is an opportunity in Montana for those who are looking for a smaller price per acre, larger
Mhm.
pieces of land. But again, if you don't have a broker like Daniel, for instance, who knows Montana really well, these properties aren't staying on the market as long as
Yeah.
they used to. So
It's like
it's
Wyoming.
important.
We established very strong, understanding of that state, and Utah, really good understanding of that state. They just don't have the same turnover. But when you find those folks that are interested in what those amenities are out there, and let's
Mhm.
face it, uh, to this day, I'm very, very high on Wyoming just because of those opportunities, because of lower price per acre. Let's stay out of the Jackson orbit for a moment. Um, and it's still a lovely state, no income tax, so there's a lot of benefits for being there. Utah, certainly it has its growth, and it's a fairly pro-growth state, so still wonderful opportunities up there.
Less
Um,
private land though, so that
yeah, yeah,
impacts values
totally,
too,
much
right?
much less. And places like that, though, now you can get into some of these desert environments, which we and national
Love.
park
Yeah.
places like Zion, or some of the stuff we've done in Canyonlands area.
Mhm.
I mean, these are very unique, compelling landscapes. You feel like you're in a painting for the most part.
Oh, I
So
love that.
yeah, yeah, you
It's
do.
true
Yeah,
though.
you know me.
Um,
I love my landscapes.
yeah.
Anyways, we just wanted to just really focus on Colorado and Montana's as general offering, and I think those same things are indicative of some of those other markets we're at. It's just they're different markets, and it's so funny when people call us and they say, "Well, I can be in Montana, Idaho," and it's like, holy cow. We
Yeah.
do need to break this down, folks. And while we understand values, I mean, look, the topography in Montana and Colorado are different, and you have a much higher latitude when you're up in Montana, but you don't necessarily have the same extremes in elevation
Right.
up there. So there's some trade-offs, and which are important beyond just because in the end, very few of our buyers are necessarily buying because it's cheaper to buy here. It's where they want to be,
Right.
and we're just
It's
helping
the
them with
first
that.
question we ask. Where
Yeah,
do you want to be?
yeah, yeah. It's not. Usually, it doesn't say, "Hey, where is the property appreciating most?" People ask, "Where do you want to buy?" Well, where do you want to buy? I mean, I can tell you all the things that I love, but I don't know if we share the same interests, right? So
Right.
um, I think these values are important, but I always go back to like the whole idea of why do you buy paintings? Yeah, I guess some people say, well, I'll buy a Picasso because it's appreciating a lot, or a Monet or whatever. And it's true, right?
Right.
But in the end, to me, when I buy art, I buy it because I like it, and yeah, I want to make sure it has some value in it, but I better enjoy that. I don't lock my paintings away in a closet or a safe. I put them on a
Right.
wall. So hopefully that's for the most part why people buy ranches. I think they enjoy them. Yes, they understand they'll get depreciation. Yes, they can do it as an inflation hedge and other things like that, and to diversify, and all those things that really do matter. But in the end, most of them go because they use it too.
Right. We're art dealers. We
They
connect
are art
you
dealers.
with the art that you need, the land art.
Yeah.
That's beautiful though. It is. It's, as much as we can look at the markets, and it is important. And that's kind of why you have a broker, so you can
Mhm.
make sure that being competitive, but at the end of the day, if you want a ranch and you have the capacity, the values are just kind of the way you get there.
Yeah, right.
Yeah.
When we look at these things too, we look at these numbers and we say these are overall numbers, but as you well know, when we'll look at a 10,000 acre ranch, some of it will be pasture land, some of it will be irrigated, some will be sub irrigated, some will have woodlands on it. Some is good for grazing, some is great for hunting, some might have a fishery component. You might own a water right to irrigate. Do you own mineral rights? How good of access is there? What's the title look like? There are so many other points that impact value. These are just summaries of kind of giving you a chance of what it means. But when it breaks down to the actual property itself, two properties could be next to each other and have wildly different values.
And
So,
just, looking ahead,
mhm.
if we've looked at the summer, we've looked at values, we've looked at these reports, what can you tell the listeners who are either buyers or sellers that you kind of see happening the rest of 2022?
Right. Well, there's a lot of things happening. I mean, we keep talking about wealth transfer, all that happening, nationally, globally, and of course that is happening. There are more millionaires produced or billionaires produced than ever before, and all these things that are going on, and an aging population of land ownership and ranch ownership. So,
Right.
there'll be continue to be divestiture out of ranches. But what I see too is so often what we work in, while the fifth generation ranchers are becoming less and less. And an interesting thing is most of those are in the fifth generation are ones that are protected by easements a lot of times
Right.
because they want to protect and pass it down through generations, not necessarily be taxed on it. I shouldn't say most, but it's
There's a
alarming
lot.
rate how
I
when
mean,
we go to these
the
events, right?
Wyoming stock growers event,
Yeah,
there were so many stewards of the land that were third generation,
multi-generation,
fourth
right?
generation. Yeah.
But I do see so many turnovers too of the rancher, high net worth folks, first generation ranchers who bought 20 years ago who are selling.
Mhm.
And part of that is they bought because they were attracted to the beauty and the financial reasons of investing in a property and enjoyment too. Uh, but their kids aren't necessarily interested in that. And these aren't the kids who were brought up on the ranch. These were, second home kind of or second ranch type markets. So I do see that inventory will be over the years can, be a lot more. That's, first generation rancher, a high net worth person who has taken care of the ranch and has
Mhm.
put money back into the property, but they're not. So you're going to deal with different motivations from a selling standpoint than before. And I
Right.
think that'll continue to happen. I think inventory is, again, I think I've already seen a number of properties that were purchased 3 years ago, 2 years ago, that are on the market.
Right.
I don't know if these are, you don't have a lot of fix and flip
Mhm.
people in the ranch market, but there are certain pockets, and even some people that we compete with that are more likely to do that. We don't focus on that prospect really.
Right.
If anything, we have a lot more conservation ethic, or a bit of more of a long-term investment,
Long-term
and
investment.
help
Yeah.
people understand what that value is over time. So, but I think inventories will remain to be small, and we'll wait a couple more years, and I think you'll see some more, maybe that inventory
Turnover.
picking up. Yeah.
Yeah. I mean, but people might be wondering how if there's a recession on the horizon,
Yeah.
heightened concern of, the real estate value overall. But at the end of the day, you know, they're not making any more land. This is
Yeah.
different than a residential product. Um, and like you always say, America is the last frontier for really investing in these kinds of
For
properties.
land, right? I mean, we do deals in South America, and I'm looking at properties in Africa and doing different things, and I love all that, and that's fun. But you can't beat, land ownership in the United States. And one of my favorite classes was real property law, and the kind of Anglo-Saxon kind of idea of owning land, and all the theories that go with it, over the years. And yeah, I still think that, we are that kind of place. The United States still offers that opportunity. That's why you see so many even foreign investors trying to come in, and some states not allowing foreign investors. It's a state by state deal, actually.
Right.
So yeah, I don't see an end to what the demand for what we provide. And you even get into some of these farm ground issues. You get into some food security things, and
Hmm.
you've even seen, Gates buying up all this land, and there's
Florida.
reasons why. And some of
Yeah.
this is food security, some of it is just ownership of productive land. And our land may not be as productive necessarily from a standpoint of farm goods, but the livestock. And then you get into the whole regenerative ag issues, and the idea is still we need proteins. It's all kind of a very interesting web we weave, and having people to be able to take care of these things in long term, be good stewards. I think that's why people should be buying it, because if you take
Yeah.
care of it, in the end, your investment will be good. So uh,
So your
I guess
outlook is positive.
yeah, it's always positive on land. I mean,
Yeah,
gosh, I wish I could buy more, quite
I
frankly.
know. It'd be nice to be a collector like Mr. Gates
Yes,
and
or Mr.
just
Malone or Turner or
Mr.
all the other
Malone.
clients that we've worked with over the time. But yeah, but even down to like I said, still the nice thing is everybody can have their own private Idaho, as I
They
say.
can.
It's not always about the 10,000 or 100,000, or whatever. It's people having the opportunity still. So I'm thankful for that.
Me too. And I'm thankful for you for many reasons, but for joining us today.
Yeah,
Did you like that
yeah,
segue?
I like that.
Awesome. And
All
thank you
right.
so much for just like your insight and knowing the market and where it's headed. And thank you to everyone for joining us. Uh, and thank you to Ken. I will see you after this sometime. Appreciate it as always.
See you. Hey, thanks.
And just so all of, we went through a lot of different data today, and we have a lot of different reports. We'll be providing that to you after this. And to learn more about what we went over today, be sure to subscribe to our newsletter on our website at www.murranchgroup.com or give us a call at 303-623-4545. Thanks all.